Hello, in this short presentation I'm going to take you through the 5 things you need to know to succeed in property in 2021. So before we do that, let's take a look at what is happening in the market today. Firstly, property prices are at an all-time high. In fact, according to the Office for National Statistics, in the year into March 2021, the UK property market grew by 10.2%. Now at that level, it is unsustainable, but why is it happening? One of the main reasons is because of government intervention followed by the lockdown itself. And that lockdown has created a lack of supply in the market. So that's why we're seeing these all-time highs. Repossessions are at an all-time low, and I'll come on to the reason for that in a moment. And the stamp duty reductions. Now, the stamp duty reduction was first introduced at the start of the pandemic, and it was a great idea from the Chancellor to help boost the economy because the property market is considered one of those main engines in the UK property market. Now that's going to start to be reduced now. So the first reduction in the discount, if you like, starts in June, and then the full reduction is removed by September this year. So what effect will that have on the market? Will it start to slow it down? I think it will. But we've got the furlough scheme ends in September. Now this is a major impact on the market in my opinion. The unemployment figures are artificially low because of the furlough scheme that was introduced. And let's face it, it was a great scheme for the Chancellor to introduce. He had to, otherwise we would have seen unemployment skyrocketing as firms were shutting down during the lockdown and pandemic period. But that is going to end in September. And I think we will start to see unemployment rise, unfortunately, and terrible for those people involved, but it's going to have an effect on the economy and, of course, property prices. Mortgage holidays have ended as well. Those people who are lucky to take advantage of the mortgage holiday, fantastic. But of course that has added on to the balance on their mortgage. And a lot of those people are likely to be on the furlough scheme. So the question is, what will then happen? And we have the Section 24 tax, which is starting to bite. Now, if you're not sure what the Section 24 tax is, that was introduced a few years ago by the then Chancellor, George Osborne, to tax buy-to-let landlords. Now, it only affects those who have buy-to-let properties in their own name and essentially has removed a lot of the tax reliefs applicable, such that those with a large portfolio are in a position now where they are likely to be losing money. And in fact, over the past 12 months, we have seen a number of landlords start to offload their properties onto the market. So what does this all add up to? Well, I believe it adds up to opportunity. The opportunities in 2021, I think, are going to be the best we've seen for some time, possibly since the last recession in 2008-2009. So let me just introduce you to other members of my team at Property Master Academy. Firstly, on the left there, Peter Licorinos. Peter has been in property now for, I think it's 22, 23 years. He was a former estate agent, had his own estate agency, sold the shares in that about 5-6 years ago, and now concentrates purely in the investor market, has a couple of businesses around that, including his own property investing. Jackie Reeves has been in property now for over 15 years, must be coming up to nearly 16, full-time investor, and probably the best coach that we have within the business. And then of course myself, Mark Lloyd, I've also been in property for over 15 years and have a large portfolio in the UK. So what do you need to be successful in property? Well, I think there are 5 main things. Firstly, you need to understand strategies, how to actually make money in property. Secondly, you need to understand financing, how it all works, what options there are. Thirdly, the legal structures, how you're going to buy the property. As I've already mentioned, the Section 24 tax, of course, affects those that buy properties in their own name. Is that still a wise thing to do? The deals, where do you find the best deals? How do you find the best deals? How do you negotiate them? And your reason. What is your reason for doing this? Because it's all right getting involved in property and learning all these things, but what is your main reason? Have you really thought about that? So let's take a look at some of the strategies you could potentially use to make money in property. So on the income side, we have, of course, buy-to-let. The mainstay of property investing for a long, long time, and still a favourite amongst many, many property investors. But for those who want a higher income, they often will choose the HMO strategy, the houses of multiple occupancy. Here you're looking to take a property and rent it out by the room. Common examples would be student accommodation as a very popular strategy within investors. Then we've got something called lease options, a misunderstood strategy, often touted as one of those strategies you might have heard of, where you can buy a property for £1. Well, technically that's not correct. You're exchanging contract on £1. That is indeed correct. But there are a few other costs involved, around about £1,000 to £1,500, which will be the legal costs. So still a very low capital input strategy and very popular if you can understand how to work it. Then there's rent to rent, which is part of a lease option. Now rent to rent, what you're looking to do here is essentially lease a property and then re-rent it back out, and you're making a margin between the two. A very low capital input strategy. Again, could start with as little as £0 up to £3,000 to £4,000 per property. Sourcing. Sourcing is a fantastic strategy, very popular with those looking to get started. Why? Because you need very little capital, maybe £1,000, £1,500 to get yourself compliant, but then it's essentially a marketing strategy. So if you're good at marketing, good at sales, this could be a particularly good strategy for you and very lucrative. One of the very first strategies I did when I started, and it's something that Peter still does today. Peter's sourcing business will turn over close to £1 million in 2021. So as you see, it can produce a really, really good income. However, the downside is once you stop doing it, you stop earning as well. It's not a passive strategy. On the other hand, commercial property is one of the most passive strategies available in the market today. One of those where if you find a good tenant, then there's very little else for you to do apart from receive the income. If you look at the capital strategies, flipping, buy to sell. So what we're looking to do here is buy an undervalued property, refurbish it, add some value to it, and then sell it. Quick turnaround, relatively speaking. Certainly you'll expect to do a reasonable flip within a 6-month period between buying and selling and create a good capital amount of money. Then you've got trading, which is literally just buying and selling. So you're buying a property at one price, selling it at another price without necessarily doing anything to the property. Development, I'm sure we're all familiar with new builds and other types of development. Again, a very good strategy for raising large sums of money. Probably a little bit risky for the new investor, but exceptionally good. And we've a strategy called freehold leasehold. There's a lot of properties in the market that have been converted by investors and landlords into sub-units, mini flats that have not actually had their title changed into leasehold. And there's an opportunity there where if you can find those properties to issue the leasehold licenses for the flats within that property, then you thereby create value in doing so. Short leases. This is again a variation on the leasehold strategy, but you're looking here for leases that are less than 70 years to run on them. As the lease gets shorter, it becomes more and more difficult to get a mortgage on it until you get to the point, and it's roughly about 70, 75 years, where a lender will not lend on that property until the lease is extended. By extending the lease, you create an uplift in capital value. So understanding how to do that can be very lucrative as well. And something called land assembly, a way of packaging different plots of land together to create a viable plot. This can and usually is done on an option basis as well, so very limited capital input required. Next thing we need to look at is financing, understanding financing. There are a multitude of ways of obtaining financing for property. Obviously, cash is without doubt the best way. If you've got access to a reasonable amount of cash, fantastic. It's by far the best way and quickest way of buying property initially. Of course, there's mortgages. So in combination with cash, and they're a very good alternative as well. We have buy-to-let mortgages and there's commercial mortgages. Very similar in their actual approach. But buy-to-let is primarily a ticks box type scenario where you reply to the lender and it will go through a computer tick box. If you've ticked all those boxes, you'll get the mortgage. A commercial mortgage, a little bit more flexible. It can be used on residential property. It's not just a commercial product, but it's more flexible and it'll look more at you and your other income, often used for more professional type landlords. Bridging finance. Bridging finance is often considered to be a more expensive way of borrowing, and it is, because generally you're going to pay somewhere between 0.6 and 1% per month whilst you use that borrowing. But it is only designed as short-term finance. So it is something, for example, you would use on a flip, or maybe purchasing land for development, where you're only going to be needing that money for a short period of time, usually around 6 months, maybe up to a year. Then there's the government, local council. A lot of these have schemes that you as a landlord can use. So there are often empty homes grants. There are often loans available to help improve properties. Always research your local area to find out if these are available. We've got crowdfunding. Now, crowdfunding has been around for probably about 4 or 5 years now, and it has become a very, very popular way of raising money. Essentially, the way a crowdfunding platform works is you, as the investor developer, approach the crowdfunding platform with your project, and they will find investors to fund it. So they act as the middleman, if you like. So it works obviously quite a bit different to the bridging and standard mortgages, but extremely flexible. Crowdfunding platforms will often look at projects that other lenders won't. Then there's a facility. Now, a facility is usually only available to the more experienced investors, or if perhaps you've run a successful business in the past, then you may be able to get a facility. What is it? It's essentially very similar to an overdraft, whereby you will agree an amount up front with your bank. Let's say £1 million, for example, because we're talking about properties, so larger amounts of money. Let's say £1 million facility, which allows you to buy properties. Now, this is different to the way mortgages work, where you have to apply to the lender first before they'll grant you the mortgage. This way around, you're applying to the bank, you'll put a very good business plan together to get a facility so that you can then go and buy properties. Joint ventures. Now, joint ventures comes in 2 main formats. There's the true joint venture, which is where you have somebody that is putting in money, who has a high net worth individual or sophisticated investor, and you're providing, let's say, the knowledge or the project or project management and all those kind of things. So you're marrying the two together. A different type of joint venture, often referred to as a joint venture, is actually a loan, where someone's going to lend you the money on a fixed rate of return, and that's really very popular. Both are in fact very popular with investors. There are different types of legal structures you can have in property, and this is something you really need to speak to your accountant and lawyer about. Your accountant can certainly advise you, but whether you hold them in your sole name, whether it's held in a partnership, whether they're held in a limited liability partnership, or indeed a limited company, is something you really need to have professional advice on. I can't advise you on this. What I can tell you is I have properties in my own name, I have properties in a partnership name, and I also have properties in a limited company. And also, do you want to control the properties, or do you want to own the properties? A lot of investors get hung up on owning properties when there is no need to. Strategies I mentioned earlier, like lease options, rent to rent, land assembly, are based on controlling those properties, not owning them. And of course, understanding how to find deals. There are many, many ways to find deals. Most popular ones clearly are going to be estate agents. But a lot of people forget about letting agents. Letting agents can also be a very good way of finding properties. But going back to estate agents, dealing with estate agents needs a certain amount of skill, because you've got to convince an agent as to why they should let you buy that property when there are so many other buyers out there. Not a personal favourite of mine, because you're competing against so many people for that actual property. When it does work really, really well is when we're in a static market or a declining market. Then estate agents are more eager to talk to you. Administrators. An administrator is someone that's appointed when someone goes bankrupt, for example. So an administrator is appointed to deal with their assets. And in property, that's the same, exactly the same. So you will get an administrator appointed to deal with someone's property or properties. And if you can build a relationship with an administrator, it's a very good way of finding good deals at a below market value price. There's of course auctions. Again, not a personal favourite of mine. I always find they oversell the properties at auctions. They sell for far greater than I would ever pay. But I do know some investors in certain areas of the countries where they manage to make it work really, really well. What I would suggest is you could potentially put a pre-auction offer in, you could underwrite the auction deal, or a post-auction offer where it doesn't sell at the auction. Those are certainly good ways of finding good deals. When we last did this exercise with a group of our mentees, we found over 32 different ways of finding deals. So put your thinking caps on and start jotting down a few ideas. So talking of deals, let's take you through a few examples that we have done, or maybe some of our students have done. First one is an HMO in Guildford in Surrey. This is just up the road from where I live. Now you can see it's not purchased. This was done on the rent-to-rent strategy. You can see what I said earlier about the minimal setup costs, £3,000 to £5,000, but the net cash flow after all costs, before tax, £1,200 per month. So you can see your payback on this strategy is very, very quick indeed. This one's in Hull, so going up different area of the country. You can see the much cheaper price of £60,000, refurbishment budget of £25,000 with an end value of over £100,000. But look at the cash flow, over £1,000 per month from a very, very cheap property. It's exceptionally high yield, and in this particular case, this was one of mine. I did a joint venture with another investor. They put the cash in. I didn't put anything in, but we dealt with the project. So it was a win-win scenario. They earned from one perspective, we earned from another. This one was through a sourcing agent in Bracknell. This is one that Peter found. It's converted to an HMO. Obviously, we're talking much higher prices here, but of course higher cash flow too. Net cash flow after all costs, £1,600 per month. Again, still a very good return and a very good return for the south of the country. Going north again to Scotland, this is a distressed landlord and distressed portfolio. This is one of our ones that we bought, 38 residential properties, commercial property and a letting agency, all for the princely sum of £750,000. The survey valuation, day one of purchase, of £1.35 million. So a profit at that point of something like £600,000. How many of those do you need to actually replace your income or change what you're doing? Again, purchase with a joint venture partner, net cash flow after all costs over £9,000 per month. This one from Manchester, from the receivers. Receivers is another word used for administrators. So this is one we picked up from the receivers. 14-bed HMO, all with ensuite rooms. Now, this particular property was actually in not too bad a condition. The problem with it was a former drugs den. So there's a few things we had to clear up there, but you can see the refurbished costs were very, very low. And again, this is one we did with a joint venture partner, so none of our own cash was put into the deal. But look at the cash flow. Let's say £3,500 per month, split with the joint venture partner, and the end value £620,000, so a decent amount of capital uplift as well. More local to me again, a plot of land. This is one I found through Rightmove, which is one of the rare occasions I've used Rightmove. But you can see the purchase costs, and we sold this with planning for £450,000, giving us a profit of £320,000, all within 12 months. So how would you like to learn how to do these kinds of deals? And this is our latest one. This is a land assembly deal. As you can see, we haven't bought the land. It's just an option fee of £1. Planning and architect's fees of £15,000. Been sold to a developer for £800 with a net profit of £265,000. The whole process took 18 months to achieve. So these are all different ways you can make money in property, and you can see these are real figures. These are figures that can be achieved in a relatively short period of time if you put the time and effort in. Now, all of these things are down to knowledge, but one thing that's not down to knowledge is your reason, finding your reason. So what is your reason? What does financial freedom actually mean to you? You know, a lot of people get involved in property, but they don't really have a goal behind it. It's just, you know, we can make money in property, therefore let's do it. That's not the right reason. You need to have a really good reason to get involved in property or any kind of endeavour where you're going to make a lot of money, because that's what will keep you going. You know, what would you do with your freedom? What would your perfect day look like? And what drives you forward? It's those things that will make you a success in property or any other business. The knowledge is something you can learn, but it's this one undecided factor that only you can do. It's having that reason, the drive to push you forward, come what may, to make it a success. So what is holding you back? So, would you like to know how we can help you do the same? Which would you prefer? Struggling along on your own, trying to make things work, trying to make square things work in a round hole, or going in the fast lane, learning from someone that's already done it, someone that's already achieved what you want to achieve? I know which I prefer, and I know which I actually chose. I did choose the fast lane. I had a mentor when I first started, as did Peter, as did Jackie, and that pushed us forward so much quicker than trying to do it on our own. So what's stopping you? Is it not knowing what or where to buy? We can help you with that. Is it unsure if the numbers add up? Again, we can help you with that. Afraid of not being able to rent out the property if you're choosing one of the rental strategies? Again, we can make sure that doesn't happen. Worried about mortgage rates? Well, I've got news for you. At some point in the future, they're going to go up. We're at historically low interest rates, but we have been now for over 10 years. When's it going to change? Scared of possible major repair costs? You shouldn't be. If you follow what we teach, those kind of things just don't happen, or if they do, they're in a minority. Or if you're put off by complications and costs around tax? Well, I've got news for you there. If you're paying tax, you're making money. But we will show you ways where you pay less tax. So here's examples of some of the people we've worked with. Viv and Ray Mitchell, after their first 12 months with us, they were achieving over £12,000 per month net cash flow within that 12-month period, and have gone on to achieve much greater things since. Had no previous property experience. In fact, Ray was a pastor in South Africa, had his own church, came to the UK with Vivian many years ago, but couldn't get mortgages. So they decided on the rent-to-rent strategy, and that's how they achieved these figures. Giuseppe, he is Italian but based in the UK. He used to work for Shell International, had very little time as a project manager, and after his first year he had 7 properties producing an income of over £5,600 per month with over £200,000 equity, all done on less than 10 hours a week. So he was part-time, very, very part-time. He's now a full-time property investor. I think at the last count he had 30 properties producing an exceptionally good income per month. He did part rent-to-rent strategy, part HMO strategy. Simon didn't do any rental strategies whatsoever. He had no previous experience of property. He just went straight into development. So anybody that says you can't do development is, as a new investor, doesn't know what they're talking about, because that's exactly what Simon did. His very first deal was a development, and he made over £250,000 on his first deal in just over 18 months. Mithelia Mahmood did a semi-commercial renovation. So what we mean by that is where you've got a shop on the ground floor and residential above. They converted the upstairs residential to an HMO, and the shop below was put onto a long-term lease. That turned out to be £1 million property, and their profit, if they'd sold it, would have been in excess of £300,000. That took 9 months to achieve. Sangita and Neil Patel-McCrindle, these have only recently joined us, and they've been on our mentorship program now for about 8 months. 5 properties producing £3,500 per month, all achieved during lockdown. They've actually now just added another 3 onto that, which is a process of going through. All achieved during the current pandemic. And then Kate also joined us during the pandemic, achieved her 12-month goal of 4 properties within 5 months. She now has 6 properties and 27 rooms with 100% occupancy. That's been achieved, I think it's within 8 months now. So all these things, with a bit of knowledge, can be done, and guidance. Kate stuck to what we showed her to do and listened to everything we asked her to do each week that we spoke to her. That's why she was successful. So what's the opportunity? Let us help you grow your property business to 6 figures, or from 6 figures to 7 or 8 figures. But before we go there, do you qualify to work with us? Because we only work with a small number of people each year, and they have to qualify on certain counts. 1, Can you commit 1 to 3 hours per day? Now, I'm not saying it has to be every single day. It might mean you've got to commit more at the weekend, but it needs to be the equivalent of that over a week period. So in other words, somewhere between 7 and 15 hours a week. If you can't, then really you need to try and find the way to do it. If you really want to do this, you need to try and find a way to allocate that time. Because if you want to change your life, that's what it's going to need to be. You need 100% commitment during that time. So no distractions. You've got to focus on the goal. Going back to a few slides ago when I mentioned about your reason, this is really, really important. Once you've got your reason sorted, you'll find that commitment. And be coachable. You know, if you're going to work with us, you need to listen to what we're saying. You don't have to follow it. If you don't follow it, I don't fancy your chances of success. So you need to listen to what we're going to say and implement it. I can assure you, if you do that, you will be successful. That's strong why, that's strong reason, and be open-minded. We're going to share with you all of the things that we do every day to be successful in property, and some of those things you might not necessarily understand or might question, which is fine. Be open-minded to the things we will show you because they work. And you need to have money to invest. Now, whilst there are some strategies that don't need a lot of money, such as lease options, rent to rent, you still will need some money. Whether it's yours or you borrow it from a friend or family member does not matter, but you will need some. Okay? So don't think of joining on the basis that you don't need any money. And anybody that tells you don't need any money in property is not telling the truth. You do need money. It doesn't need to be a lot though, and it doesn't need to be yours. So let me tell you about the mentorship program that we offer. It's you start immediately because some of this is online. It's a new support program. You get direct access to myself, Jackie and Peter and the full PMA team and network. And it's an online mastermind type program. So the online element, you get access to all of our training courses. There's a weekly live Zoom face-to-face conference, minimum 2 hours with a weekly Q&A. And support and guidance on all strategies. You get also access to a private accountability group where you get a chance to ask any day-to-day questions as well. We have masterclasses on a property strategies overview, HMOs, deal sourcing and packaging, assisted sales, joint ventures, lease extensions, and many, many more. Value of that, well, I put on there over £200. It's a lot more than that. But essentially, you get access to all the training courses you'll ever need. You also get access to our resource vault, which is all the agreements, deal analyzers, and every other kind of document that we, myself, Jackie and Peter use on a day-to-day basis, you have access to as well. And our Facebook support group, valued at £2,500, invaluable. You get the members of the mentorship are on that group, and you get to ask questions, learn what from other people are doing as well, and make many, many good connections as well. Initial 6 months mentorship with us and the team is valued at over £10,000. Prior to lockdown, we used to charge over £20,000 for our live mentorship over a 12-month period. So 6 months mentorship would be equivalent to £10,000 plus VAT. Total value over £18,700. However, all of this is just £495 plus VAT per month normally. But for fast action takers, we have a special show offer of just £375 plus VAT per month. It rolls on after the 6-month period for as long as you like until cancelled. There are also one-to-one options if you want to discuss that. You can bring your business partner and life partner for free. Here is the URL to book, and if you want to have that call to discuss one-to-one options or anything else before committing, then click on that link there and we can have a one-to-one call over the next few days. Whatever it is you decide to do, I wish you all the best with your investing over the rest of 2021, and I hope to see you at one of our events in the not too distant future. Thanks for listening.